Are you a growing freelancer or small business owner in Canada? Do you ever look at your profits and wonder, am I paying way too much in tax? Or maybe a higher fear across your mind. If something goes wrong in my business, are my personal savings at risk? If you've asked those questions, you've probably heard the word incorporate. But what does it actually mean? And is it the right move for you? Hi, I'm Arlene, and as a bookkeeper, I help business owners navigate these exact questions every day. Today, we are cutting through the jargon. I'm going to break down the three most important factors you need to consider before you decide to incorporate. Number one, the liability shield. This is the most critical and often misunderstood. When you incorporate, you are creating a separate legal entity. Your company becomes its own person in the eyes of the law. Think of it like a legal firewall between your business life and your personal life. If your business takes on debt it can't pay, or if it gets sued by others, that firewall protects your personal assets, your house, your car, your savings. Creditors can only go after the assets owned by the corporation. So the first question you need to ask yourself is, what's the level of risk in my business? If you are in an industry with a higher risk of lawsuits, this protection alone might take incorporation worthwhile. Number two, the tax savings. Now, this is the reason most people start looking into incorporation. And the protection for savings is real. Here's the simple version. As a sole proprietor, every dollar of profit your business makes is added directly to your personal income and taxed at your personal marginal tax rate, which can get pretty high. But a corporation pays its own tax on its profits. And thanks to something called the small business deduction in Canada, that corporate tax rate is much lower than most personal tax rates. You only pay personal tax on the money you actually take out of the company, either as a salary or as a dividends. This is a huge advantage if your business is consistently making more money than you need to live on. You can leave the profits in the money to reinvest, buy equipment, or save for a rainy day, all while deferring a big chunk of personal tax. Okay, so we have a legal protection and tax savings. Sounds perfect, right? Well, that brings us to the final crucial point. Number three, the reality check. Cost and complexity. Incorporating isn't free and it isn't simple. First, they are the costs. You'll have one-time setup fees to legally register your corporation, which can be several $100s or to a couple of $1,000s. Then you have ongoing annual costs. You have to file a separate, more complex tax return for your corporation every year, the T2 return, which almost always require an accountant. Second, there's complexity. You can't just use your personal checking account anymore. The corporation needs its own bank account, its own credit card, and you have to follow strict rules about recording everything. The administrative work increases significantly. You have to keep detailed records, check shareholder loans, and hold annual meetings. It's a big setup in terms of paperwork and responsibility. So let's recap. Should you incorporate in Canada? Consider it for the liability protection if your business has risk. Definitely looking it for the tax savings if your business is consistently profitable. But be prepared for the added cost and the complexity that comes with it. There's no magic income number where it suddenly makes sense for everyone. My best advice, don't make this decision alone. Ask others, ask who is already in the industry, and also ask your family. Once you think you might be ready, talk to a bookkeeper or an accountant to run the numbers for your specific situation. What's your biggest questions about incorporating? Let me know in the comments below. I'd love to help. And if you found this video helpful, please give it a thumbs up and subscribe for more business and bookkeeping tips. Thanks for watching, and I'll see you in the next video.